And you're welcome back. It promised fast returns. It promised of a robust digital trading platform, and it attracted thousands of Nigerians desperate to multiply their savings. Now, CBEX, a cryptocurrency and digital asset exchange platform, has crashed, leaving countless investors in shock and despair. What some believed was a legitimate investment opportunity is now being labeled yet another Ponzi-style collapse, raising fresh concerns about digital asset regulation in Nigeria. But beyond the headlines and financial jargon lies a deeper story. Why are so many Nigerians repeatedly falling for schemes like this? Is it a matter of ignorance, desperation, or perhaps something much more psychological?
On a big story this morning, we unpack the human, regulatory, and systemic dimensions of the CBEX crash and the wider digital asset environment. Joining us, Dr. Gbonjubola Abiri, consultant psychiatrist and also associate lecturer at LASUTH, here to help us understand the psychology behind high-risk investments and the emotional toll of such financial losses. And also, Iwa Salami, Director, Centre of FinTech at the University of East London, bringing insights into what effective regulation of digital financial platforms should look like, especially in emerging markets like Nigeria. You're welcome. Thank you very much for joining us.
Thank you. Thank you for having
me.
Thank you. Welcome, ladies. Ladies, this it feels like deja vu all over again. MMM, MBA Forex. I didn't even know what MBA Forex was. Yeah, and now CBEX. Imagine my surprise waking up and I saw CBEX and I thought, wait, Bez? It's confusing. But I mean, doctor, from your work in psychiatry and psychological, evaluation, what exactly is this pull or attraction that we constantly see with Nigerians and get quick, die fast? I'm sorry, I just couldn't help it. I couldn't help it.
Slow down, girl.
I'm sorry. Dr. Abiri, you have the floor.
Well, so now it's happened to us, and so it's almost easy to say that it's Nigerians. But to be honest, it's happened world over. And so you'd probably remember the Benny Madoff story, which had this huge, Ponzi-like story over the couple of years. I mean, even as a psychiatrist, sometimes you see it and wonder, and you think about the fact that it hurt you before, why are you going back there again?
Exactly.
However, we must...
situationships.
However, we must understand, the behavior, economics of behavior. The fact that people will continue to do certain things in spite of the fact that it has hurt them in a certain way before. And that clearly is, backed by psychological theories. So one of those psychological theories is the theory of prospect by Kahneman, that says that people are very likely to be driven by the fact that there is a promise at the end of something. They will not look at what they would lose. They will not look at what the risk involved is. There's no certainty. Of course, the money is huge. It sounds, too good to be true, but people will jump at it anyways. Aside that is the fact that there's a social theory that talks about the herd mentality, the group mentality. Mazino is doing it, so why can't I do it?
Might as well try.
Yeah, why can't I try as well? And then there are other theories that talk about, cognitive biases, a systematic error that, happens when people are taking decisions about life, even when judgment is poor, even when it seems illogical. And so you have something that is called an authenticity bias. A big celebrity just endorsed it. It's too good to be true. Why don't I just jump on it? Sometimes, sometimes it's the fact that, you can't believe that you would miss the signs. Oh, I'm financially savvy. I know what to look out for. I know, I know when it's going to crash. And so people will continue to do it. However, it's funny. However, I think it's also very, very important that we understand that the psychological underpinnings of things like attachment theory. So for instance, if you had a child who had inconsistent caregiving, you're with this person today, someone else takes you tomorrow, someone else takes you tomorrow. Then, even as an adult and in making financial decisions, what people find is that people are more likely to be attracted to uncertainty rather than certainty. Then, of course...
So, greed doesn't play into this?
Oh, definitely, there is greed. Greed because there is a hope for huge financial gains. However, we must also talk about the fact that it is hope that is covered up as aspiration or desperation.
I was going to say it's funny because people who went into these schemes, who go into these schemes, actually know it will crash.
Yes, finally.
They've seen it before. They're like, if I get in, get out.
Get in, get out.
I put the fast one on them, hey, joke's on you, but still crash about the people crying. Why didn't they go? Anyway, another thing. Ms. Iwa Salami, let me come to you now. Being a fintech expert and all, I'm wondering exactly what people missed out. Weren't there signs that people could have seen, whether the investors or maybe even the government, for instance? CBEX was out there. It was garnering popularity. People were investing. What did the government miss out? What did the people miss out?
So, I mean, the one thing I'd say really is that, people would always want, a quick turnaround for investments, individuals. And I think a lot of these really is driven by greed. And we would usually say, as most financial regulators in the world, particularly around crypto regulation, would usually have an initial stance that people should be very wary of investing in any crypto type platform, and if those platforms are actually known and registered, that they should only really be investing what they can afford to lose, because of course we know across the history of crypto assets and cryptocurrencies, these are quite high risk assets, and therefore trading platforms that hold themselves out as being crypto asset trading platforms or crypto asset exchanges, really there's an expectation for starters, but firstly, that actually you're registered by the Securities and Exchange Commission, and that, whoever is transacting on those platforms really are kind of aware, should be aware that they're actually registered, trading platforms. The one thing we usually say to our students of fintech regulation and the regulation of financial markets here really is that despite the fact that the rationale for securities regulation is primarily investor protection, retail investor protection, and market and the preservation of market integrity, and to a lesser extent financial stability, we also know that regulation isn't 100% at preventing, investor fraud, investor, losses, or indeed financial crises, as we've seen in all the history of financial crises across the world. I mean, we've had fantastic regulation, but we still have these financial incidents and crises happening. And it's the same with investor protection. So basically, one of the things we also are aware of is, despite the fact that we say this to our students, we also tell them that actually there are disadvantages of regulation. And one of the disadvantages of regulation really is a concept called moral hazard. And that concept, it has two hats. Now, the one hat that's particularly relevant to us here is the hat that because individuals know there's regulation, they don't do their own personal checks on platforms that they're investing in or schemes that they're investing in. And there's always that responsibility on the retail investor, on the investor, to actually check to find out, is this a legitimate business? Is this a viable business? Is this something worth doing? And so the background check, there's that onus really on the investor, the retail investor here to do that. So, I get the fact that there's an expectation that the regulators have their own requirements, an expectation to actually regulate. But there's also that huge responsibility, I'd say, on retail investors. I mean, if you're going to be trying to invest more than you can afford to lose, then the onus is on yourself to actually be sure that you've at least done your own research.
Well,
to a certain extent.
Professor, just for clarity now, cryptocurrency trading is not 100% bad, is it? And then if you could also attend to Ponzi schemes as well. Is it 100% no-go, are you saying?
Okay. So crypto assets, right across the history of crypto assets, initially was, there was this big issue as to people not even touching crypto assets, and we had different approaches to regulation across the world, from some regulators not wanting to deal with it initially, to some actually outrightly banning it. But we're at a situation now internationally where regulation is out now. Most advanced economies are regulating crypto assets. So we're regulating the licensing of platforms coming on board. We're regulating different dimensions of how they're trading. Yes, indeed, there are aspects that need to be strengthened across the world, and therefore, and across the various regulatory provisions in different countries. But as we speak, we have platforms across the world that are complying with regulation and that are legitimate business and that are giving people the opportunities to actually transact, trade in crypto assets. Obviously, a very hugely volatile asset class. So that comes with the, I'd say that comes with the territory of the type of asset we're talking about. But in terms of the actual trading platforms, we have regulation in place now to ensure that before you actually, and this is across the world, that before you actually institute yourself as a trading platform, you're licensed to transact.
Okay.
And if you're transacting without license, then you're falling foul of regulation, and you should be expecting the repercussions, i.e. the enforcement provisions that will be leveled against you for doing that. So it's not an illegal business, crypto asset trading, definitely not. And crypto asset transactions, no. If you're transacting on platforms that are registered and adequately licensed, it is legitimate business.
Now, Professor, I don't know if you just saw, if you're looking at the video we're playing now, that's a certificate from the CBEX office, so showing that they're actually licensed here in Nigeria. Yet, they crashed. Now, I do hear what you say about personal responsibility when it comes to the investors, but what could they look out for? What else could they look out for?
Can I twist that question?
Yeah, go ahead, Judith, please.
Professor, you are, Professor Iwa Salami, you are a director for the Centre of FinTech at the University of East London, which literally means that you also critique the regulatories of different countries when it comes to, financial bodies such as this. If you look at our regulatory bodies and the laws and the guidelines that guide these companies, what are the gray areas?
Flaws.
What are the flaws? If you were to critique it, what are the gray areas and flaws? And how can we make it watertight for the populace?
Thank you very much. So there are two questions that you've asked. So the first question is that, yes, CBEX and its promoters and affiliates were licensed by the Corporate Affairs Commission to be companies, okay, that can actually engage as basically registered companies. Now, to engage in a financial business, I'd say, you need the relevant license. If you're a bank, for example, you need a license from the CBN. If you're a platform that deals with digital assets or any type of financial instruments or assets, you need a license from the Securities and Exchange Commission. Now, CBEX was not licensed by the Securities and Exchange Commission. I just need to clarify that. It might very well be that the certificate that they had there was a certificate basically of one of their affiliates, or of them sort of saying that actually we have a certificate from the Corporate Affairs Commission as a registered company. But in terms of being licensed to engage in security, in the securities business, capital markets type transactions, they would have needed a license from the Securities and Exchange Commission. And we know that they didn't get that because the Securities and Exchange Commission have clarified and have mentioned to us that they were not licensed. In fact, if you go to the platforms, which I did actually, to check whether or not they were licensed, or the verification of really their licensing status on the Securities and Exchange Commission, they don't come up, so they're not there. So they were not licensed.
Licensed or not, is our regulations airtight or watertight?
So I think the confusion here is that you can have companies that have been through the Corporate Affairs Commission and are licensed companies, okay? But the situation is, if you're going to transact, as it was in this case, if you're going to transact in any financial markets or any financial business, you need the requisite license. And that's predominantly because banks and other financial institutions are quite heavily regulated businesses because of the impact that they do have on the economy. And therefore, they're kind of like a different class of companies, if you like. So not just only would they have a corporate affairs, as in the case of Nigeria now, Corporate Affairs Commission's license, but they do need in order to engage in financial markets business or as a bank, they would need a license from the specific regulator that's in charge of regulating that space. And that could be, if it's a bank, the central bank, and if it's a financial market or investment business, that would be the Securities and Exchange Commission. So I think the issue really here is that you have two kind of licensing processes, but for financial firms, they actually do need to be need a license from the specific regulator that regulates and supervises that industry.
All right, thank you very much, Professor. I'm wondering who has all that time to actually go and start getting these details before investing. But that's what we should do, due diligence. Dr. Gbonjubola, let me come to you now. Let me put it in a small story. So my salary no longer takes care of my luxuries, notes to management. Times are hard. The economy is, what costs 100 naira before costs 300 naira now? Eggs, for instance. How much do you buy eggs now?
What, 6, 7, 6, 8, 8,000?
For just, wow. I don't know, because my wife does the shopping, but it's that bad. Now, if you present me such a larger-than-life type situation, like, okay, if you put in 100,000, you're going to get 200,000 by the end of 30, 41 days or so, I'm likely to say, okay, let me give it a try. Let's speak to the psychology of this as human beings when we have needs, yet we can still invest. Gamble, the word is actually gamble whatever assets we have, just with the possibility of getting more. How does that work in our heads?
I mean, so to be honest, unfortunately, if that kind of scheme was brought to us, chances are, if one of us doesn't jump at it immediately, then the rest of us will go home and start to think about it. Because you're thinking, I can cash out before, you know, it all hits the ground and everything, you know, bursts, and it's so bad.
Excuse me.
Yes, please.
If I was able to go off the scale, trafficked wife, I could do anything. You know what I mean? I can, like in front of you, like the passport, America, streets. And I was like, what do you take me for?
So again,
I can go through anything.
Yeah, it's best that you look at individuals, not, you know, not the general idea that, you know, these things have happened before. We've heard the story. Chances are, even after this CBEX crash, a number of people are still going to jump on another one. Largely because of things like fear of missing out. Like I said earlier on, everybody's doing it. Somebody has told me. Are
there economic influences at play here?
Oh, definitely.
Is it because of the situation of Nigeria that such investors, and I mean in the case of CBEX and the rest, will take advantage of the situation?
Well, to a large extent, but not necessarily all the time. You know, when I was reading up the story yesterday, I also found out that, you know, a musician also put in 10 million.
Yes, he
so he wasn't. Yeah, he wasn't.
With the world's tiniest violin.
So unfortunately, he wasn't struggling as compared with quite a number of people who did it out of, you know, desperation, poverty, ignorance.
I get you.
And because they didn't actually know. The honest truth is, regardless of what the scheme is, people from different parts of the socio-economic spectrum will fall for it. They'll fall for it because everyone wants a quick buck. Everyone wants something from, you know, the big pile. Everyone will say that I would get my share before, you know, luck runs out. I think that because these people also use very compelling people who are sweet talkers, smooth talkers, who will tell you, who will be able to tell you, you know, things. And of course, the people that they speak to as well are extremely vulnerable. They have a high level of trust. They're high risk takers, and they're most times not financially savvy. What they want is, this will become this, let's do it. But unfortunately, it doesn't always work out.
I remember last year, and it's very clear around this time, I was saying it that when you see an economic downturn that we're seeing with the numbers in our inflation, what happens is a rise of the Ponzi schemes, but also religious bodies as well. There's also the churches and the sects or the cults that would, you know, draw them in, and people are seeking miracles instead of going to church. We see all of that. There's sales of holy water and, you know, like oils. And so I'd like for you to talk about the cultural norms of this as well that we're seeing, whether or not people are trying to get rich quick, whether or not the economic issues, but there's also more at play at the cultural undertones, and I'd like for you to address
Well, so our conversations are almost always incomplete if we don't talk about social, cultural, and religious, you know, underpinnings as well. It's interesting that in psychology, you also talk about what is known as the affinity, you know, affinity phenomenon, where quite a number of these schemes look to organized society. So they look to churches, they look to, a professional who is good at what they do, they look to, very organized structures.
Yeah.
And of course, when there is an economic downturn, sometimes people expect that suicide rates may go high. Sometimes people actually stay on. People are actually looking for the next big break. People are actually looking for what looks like hope. And so while the CBEX crash may look like greed to a lot of people, it's also hope covered up in desperation and aspiration. And so, whoever is listening, and quite a number of people would dismiss this, would invalidate it, and say that these people were just stupid. It's not stupidity. It's psychological patterning. Because some people have done this before, they'll do it again. Some people are of the opinion that, nothing good will ever come to me, largely because they may have heard someone say to them when they were young, you're not good with money. Somebody may have gone through a traumatic life event that looks like this, that may be relationship inclined. But again, after a while, it then goes on from just relationships to even finance as well. So again, like she said earlier on, Professor said that people need to be informed. But people must also want that information to be able to do something better with the information. A lot of people will continue to thrive in ignorance. And unfortunately, a key factor that will drive the schemes is silence. The fact that people are ashamed, that how can I tell other people that someone like me, someone as smart, as intelligent as me fell for a scheme like this.
Yeah.
But we also need these people to come out to tell their stories. Because
like the musician,
it can happen to anyone.
Like the musician has that actually. I thought that was.
What I just took out is just bringing like desperation cloaks in hope.
Yeah.
Just cool.
Yeah, that's it.
Dr. Professor Iwa Salami, I've got one for you. Now, if I was to make a transaction at the banks and it was, say, more than 5 million naira, I know that there is a ding or a bell that rings at the EFCC office. Now, in these kinds of cases where you have CBEX, MMMs, and the rest, isn't there some kind of mechanism that could be put in place where when people invest in these schemes, that it rings that same bell at these authorities, the EFCC, for instance, as we're speaking of? Is that anything that could be put in place or that already exists?
And that's a very good question. That already exists, actually. So if CBEX actually was, if they were a legitimate business, we have the Financial Actions Task Force, which is the global standard setter, if you like, the watchdog for financial crime across the world. So they're the international body. The EFCC, Nigerian regulators across the across the board, with the Securities and Exchange Commission, the CBN, are quite aware of what we call them FATF, the Financial Action Task Force. And the primary reason is that countries that fall foul of the recommendations of FATF would usually be put on a grey list or on a type of list that isn't good for foreign investment in a country. So the regulators are quite aware of this. And so FATF have a regulatory provision that for crypto asset transactions that exceed a certain amount, so that exceeds $1,000 and 1,000 euros, there needs to be something called the travel rule compliance, the travel rule, I'd say, which basically requires that both the sender and the recipient exchanges know exactly who are transacting in those amounts. So basically, there should be an exchange of the beneficiary and the recipient, so we can track who is actually sending that amount of money, and that's not a huge amount of money. I mean, that's 1,000 euros and dollars. And so therefore, if we have that in place, I mean, if CBEX, for example, was licensed, there would have been a requirement, a regulatory requirement that they would have been violated if transactions exceeding that amount were actually happening on their platforms. So we do have that in place. Okay. And I just wanted to piggyback on the point that
Dr. Gbonjubola
actually mentioned. So there's the FOMO, which is the fear of missing out, that is very endemic, I'd say, in the crypto asset space. We have that across the board, whether in decentralized finance, which is another dimension of crypto assets. People just generally feel like if there's going to be an opportunity here to invest and get money, they want to be a part of it, and so this is where that whole, I'm not a psychologist, but we see this happen across the world. It's not just a Nigerian situation. And that's why in the instances of CBEX as a trading platform, I mean, it's very unfortunate that CBEX really was not licensed to function. We've had instances, again, tracking across the history of crypto assets, where initially we had these platforms existing without licenses because, of course, regulators at the time didn't really quite know what to do with them. But then we had a situation where they were licensed. There was, regulation came on board to have those trading platforms licensed. And in fact, some of them had to go through a period where they didn't have any licenses and were given deadlines to actually get licensed, KYC on all the know your customer exchange requirements, for them to have done that on all the parties that are transacting on them, people that have accounts on them. So if we look at the history of crypto asset collapses right from the very beginning, looking at an exchange called Mt. Gox, right down to FTX that we're all aware of, that happened in 2022. A trading platform that was quite close to the Securities and Exchange Commission, the US Securities and Exchange Commission. So across the board, both as unregulated crypto asset firms, right down to even the regulated crypto asset firms, we still have situations where, exchanges collapse. And that's why, as we progress in regulating the space, there's a need not just only to actually regulate in terms of having licensed trading platforms, but to actually know what's going on in those platforms. I mean, how are they using people's assets to transact? There's another concept called proprietary trading. To what extent are they using the monies that people have put on those exchanges to transact?
Professor, we do have to round off here because we're getting close to the end of the show, but I just wanted to ask Dr. Gbonjubola here to please, for those people who might feel like they're losing out when these kinds of opportunities come through, what do you have to say to them that would calm their fears and perhaps save them from a psychological point of view, please?
So,
real quick, because we're out of time.
Well, to be honest, you can't save everyone. And so you can only hope that the information that you put out there at a point in time will be able to help these individuals. I think it's particularly important for us as individuals to know ourselves. What kind of person am I? Am I anxious? Am I, highly trusting of other people? Do I have a, huge risk appetite? Would I do things even when everyone says don't do it? So know yourself and know when to call it quits. Also be very financially aware. Be informed. So, for instance, I didn't know anything about CBEX until it crashed, and then I started seeing it online. Be aware. Yeah, be aware, even though you're not putting your money there, and also learn from experience.
Yeah.
The greatest teacher, of course, is experience. Many years ago,
it doesn't have to be your experience.
Yeah, it doesn't exactly. It doesn't have to be your experience, but you'd be surprised that some people still want to make their own mistakes and learn from them. Again, we may call it stupidity, but it's called psychological patterning. So people need to be aware. And if you've fallen for this one, and there are people like this, my heart goes out to you. Beyond education, awareness, and advocacy, we need to show these people empathy. Because if they knew better, they would do better. And so with this information that we shared this morning, I'm hopeful that people now know better, and going forward, they will do better.
There are some people that know better, but choose not to do better. And to them, I say, carry on.
Well done. Professor Iwa Salami, I want to say thank you very much. Dr. Gbonjubola Abiri, thank you very much for giving us such a stellar inclusion on our lineup today. We do appreciate it. And we'll do better ourselves. We'll try and put everything you said
I've done my own.
into practice.
If it get quick, get rich, die quick. You don't even know.
Thank you, ladies.